The odds of another jumbo interest rate cut by the Bank of Canada were lowered by the country's latest inflation numbers. Statistics Canada says the inflation rate climbed back up to 2% in October from 1.6% in September. The results have shifted expectations to the likelihood of a smaller quarter percentage point interest rate cut next month from the central bank. Dr. Moshe Lander joined us to explain why the inflation numbers may delay a large rate cut.
The Bank of Canada is committed to keeping inflation between 1% and 3%. So 1.6%, while it was good for Canadians, is actually a little bit on the low side. So the fact that it came up to 2% is not anything to necessarily panic about. The Bank of Canada now has to decide, is the weak economy, is the weak labor market justified for a 50 basis point cut, or is the higher inflation justifying a 25 basis point cut? This is what they're going to have to decide in the next couple of weeks. They'll get a little bit more data, but for their meeting in December, but this is essentially the balancing act. If they cut 50 basis points to try and support the economy, to try and support the labor market, they do run the risk that inflation could now creep up above 2% towards the upper end of their target. If they only cut 25 basis points, they're making sure then that it's not going to lead to inflationary pressure, but they're not necessarily doing all they can to support the economy. The good news for the Bank of Canada is they meet 8 times in 2025. So my money is on a 25 basis point cut. And then they can always decide to cut it another 25 basis points when they meet in 6 weeks from December, which would be late January.